let's get to those top picks from Alex Ruus. Enbridge is your number one idea.
Yeah. So Enbridge, perfect company for this type of environment. Should not really be affected by recession or no recession. This is just a stable, key infrastructure company, the largest provider of liquids pipelines in North America, also owns some power assets, and just plows along and provides critical infrastructure. And one of the really appealing things here, again, you look at how hard it is to build pipelines now. Well, these guys have the pipelines in place, so because it's so hard to build new pipelines, the guys that own them today should become more and more valuable over time. And so, and this company is relatively attractively valued, trades at 16 times earnings, and pays you a beautiful 6.7% dividend yield here. So it's holding we quite like.
Okay, and isn't it interesting? Just a few years ago, people were shaking their heads about Enbridge. How are they going to finance all this growth? But the stock has come back. Yeah,
no, and it's and it's grown a lot. If you look over the last decade, this company has grown a lot, and we think there's decent growth in front of the company. And again, the market just, if you, like I always go, a lot of people love to buy the rails. People understand the rail story, difficult to replicate assets, and key infrastructure for your economy. Well, it's the same thing for Enbridge or TransCanada. These are key infrastructure companies and should be valued as such.
Your next idea, Tourmaline Oil.
Yeah, so this is a great success story. Everybody in Canada always likes to jump up and down and talk about Shopify as a great success story. Well, this is a company that was started basically 15 years ago at zero, and today it's a $27 billion company, Canada's largest natural gas provider, low-cost provider, steady wealth generator for shareholders, and it's just it's a story everybody in Canada should know about, but most people don't because it's quote oil and gas, and they're doing a great job. It's primarily natural gas, so in a way, this is a green oil and gas company because the biggest way we're reducing CO2 emissions today is converting coal-burning plants into natural gas burning plants. And North America has reduced their CO2 emissions a tremendous amount in the last 20 years by doing exactly that. So companies like Tourmaline enable that. And so this should really be considered a green company, but a lot of people don't consider it that. But it's just a great wealth generator for shareholders.
Do you think a bunch of big portfolio managers are just permanently out of oil and gas, or at least reluctant to invest in it?
Oh, for sure. Currently, I think so. But I think, if as things go on and people realize that, oil and gas is going to be with us for a very, very long time still, wind and solar and geothermal and hydro are going to be increasing parts of the power generation grid. But we cannot, unless we want to go back to living in caves and not having dishwashers.
That's going pretty far. Well, caves.
But the point is, if you look at what's
our society runs on hydrocarbons. You're right.
Well, and they're not energy in general. And so if we can replace energy, but it takes a lot of energy to live the lifestyles that we do in North America. And
you're so right. Yeah.
And you can't replace it with green stuff overnight. It's going to take 50 to 100 years to do it. And so once people come to that realization, they'll go, well, you know what? These companies are going to be around, and they shouldn't be discounted to the level they have in the current market.
We're tight for time. Element Fleet, the huge fleet management company, this stock trading at record levels this week.
Yeah, and again, we talked about at the beginning of the show that this is a market of stocks. It's not a stock market. Everybody goes, oh, we're in a bear market. Well, there's a perfect example. You can, I was like Jim Cramer's comment, there's always a bull market someplace. Well, this is a perfect example. So this is a great company, North America's largest fleet manager, also in Australia. And, they've been just steadily executing. They have a nice, solid growth story. And it's still only, even after the depreciation, still only trades at 15 times earnings, pays you a 1.5% dividend yield, and it's going higher.
So if I need a big fleet of cars, they'll run it for me and finance it and stuff like that?
Yeah. So they'll come in, and so largely they buy the vehicles directly from the manufacturers, and because they're buying at scale, they get great discounts, and then they manage it, help you manage your fuel purchases and all that sort of stuff. And then similar to the healthcare insurer, they take kind of a margin on top.